With investing analysis on today's healthcare headlines, this is your market checkup. I'm Allison Southwick, and I'm joined today by David Williamson, healthcare analyst here at the Motley Fool. Today we've got some stocks popping and dropping, and we're also going to rank some very bad news for three big companies. We're talking Glaxo, Pfizer, and Sanofi. So first, though, let's start with a stock that is popping huge today. Vanda Pharmaceuticals, big day after an FDA panel found their drug for a sleep disorder.
Yep.
It's found safe and effective. In a couple of days, we'll know if the FDA is going to approve it. They probably will. They tend to. So what can you tell us about this drug?
Well, it's pretty interesting because the shares have nearly doubled at this point, and I think it's because a lot of investors had kind of written this drug off. That's usually why you see big pops, is there's not a lot of investor enthusiasm behind it. And now this was the briefing documents for their drug that treats non-24-hour disorder. This is a sleep condition that affects the blind because their circadian rhythms get thrown off. There's no drug out there that's approved to treat this. There's about 95,000 people in the U.S. who would be potential patients. So that's a pretty large addressable size of a market. And this drug, it had failed an unrelated trial treating depression. It did post pretty good data in this indication, but there was some question marks surrounding their phase 3 trial. There was sort of moving endpoints with it. They ended up pooling the data, so investors were sort of skeptical that maybe they were hiding some things that they didn't like. But looks like the FDA likes it on these briefing documents. The advisory committee is on Thursday, so we'll see.
So then, obviously a huge day for them. Like you said, they've almost doubled.
Mm-hmm.
So what do you think of Vanda going forward? Is there anything else in the pipeline for them, or is this really
this would be
watch?
They have a drug that they've partnered out, but not a lot of sales are coming from that. This would be the big catalyst, and because it's doubled, I'm a little nervous. There's a certain risk-reward benefit that's out there, but since these documents leaked and it looks like the FDA is pretty bullish, I'm a little concerned that there's a lot more downside now for investors. The FDA advisory committee could look at that phase 3 trial and raise some serious questions. The FDA, which can go against their advisory committees, may not be as positive as the person who wrote up the briefing documents. So, the approval decision is all the way January 31st. We'll find out about the advisory committee on Thursday. It's pretty exciting. The market cap's now $380 million. Just because, though, there's no other approved drugs for this treatment, they can't price this thing like an orphan drug. It's not going to be, through the moon pricing. So I just feel like there could be more upside, if it goes through the approval process and it gets picked up. But given some of the question marks around it, I'm just a little leery about telling investors, jump on board the Vanda bandwagon.
All right, so Vanda had a great day. Sarepta, however, is having kind of a bad day. The stock plummeted, their biggest drop in 16 years, in fact. The reason, the FDA has called into question trial results for their treatment for Duchenne muscular dystrophy. So the bottom line request is that more data is needed. So it doesn't necessarily sound like a nail in the coffin.
No, it's not a nail in the coffin, and it's funny, compared to the last biotech we just talked about, Sarepta was incredibly popular, had a lot of investor enthusiasm behind it, and that's why this plunge is so steep, because the company was gunning for something called accelerated approval. Now, it was trying to get approved based on its phase 2 data, saying, look, the results were great. This is an unmet need. This is a very serious disease. You should approve us. We'll still run a large phase 3 trial, but it'll be post-marketing, and we can help these patients. The problem that they ran into is that they have a competitor in Glaxo, Smith, Kline, and Prosensa, and their drug failed its phase 3 trial. And so that's called into question potentially the endpoints of dystrophin production, whether that's clinically relevant, and also the FDA, as you said, raised some questions around the 6-minute walk test, which is sort of considered the standard. It's how far can you walk in 6 minutes, and will this drug help arrest the decline that's caused by muscular dystrophy?
So what are you thinking about Sarepta going forward in light of this?
It's a pretty big sell-off. If you believe in the drug, it could actually be a decent buying opportunity, but you're going to be waiting for a while. Sarepta's CEO said this is going to push approval off over 2 years. They're going to meet with the FDA next month, and then they'll hope to get a large phase 3 trial going halfway through next year. They're going to have to compare it to a placebo, so they're going to need more patients than they would otherwise because they're going to need a significant control group as well to justify that 6-minute walk test data, and that's what the FDA was concerned about. Now, you take a look at the cash situation, because when you're running these phase 3 trials, you're worried about dilution. Sarepta has $270 million in cash. They burned about $50 million over the last 12 months, so they should be able to last a ways. That doesn't mean dilution is definitely out of the question, though. I think if you believe in eteplirsen, this could be an interesting opportunity to buy, but the stock isn't going to have any real catalyst for a while, so that's not something biotech investors like to hear, and that's kind of why it's down. They want to put their money where there's some action, and there won't be a whole lot of action around Sarepta for a while.
For that rare patient biotech investor. Very rare one. All right, let's move on to our update in Obamacare. Estimates continue to get flung around about how many people have actually enrolled in the Affordable Care Act. Now it's looking like less than 100,000 have signed up, far short of the 800,000 goal that they had for the first 2 months.
Yep.
But from the headlines, 100,000, I thought, well, that doesn't sound too bad. I mean, it's bad.
It's pretty bad. It's pretty bad. I mean, it's definitely improving from that 6 on day 1 to about, 250 on day 2. Now we're up to about
exponential growth.
Yeah, now we're up to about 40 or 50,000 enrolled, and you're going to see 2 numbers bandied about, and one is excluding Medicaid, and we'll get to Medicaid a little later in this, but yeah, it's bad. We're looking at about 40, 50,000 have been signed up. Now, these are unofficial numbers. We'll get the official numbers later in the week, but this is sort of what the Wall Street Journal has discerned. And, you know, it's definitely tough. Medicaid, however, has been a little bit of a bright spot. That is exceeding expectations in 10 states. In just 6 weeks, they've signed up 444,000 people, according to Avalere Health, which is a analysis company. So, you know, there are some bright spots, but yeah, the problems with the exchanges have clearly been a bottleneck at the start of this.
So in the Bloomberg article, they talked to a spokesperson from the Department of Health and Human Services who let us know that in the first month of Romney Care in Massachusetts, which is kind of the model for Obamacare in a sense, only 124 people signed up. So it sounds like, you know, the battle is waging here, but the war, it's going to be a long one to fight.
Well, I think that's completely the right attitude. And if you look at the states that are running their own exchanges, they're doing far better than Massachusetts did in its first month. They're running into some of the problems that we've seen at healthcare.gov. You know, these are problems when you, you know, launch a very complex operation in a limited time window. And, you know, to help fix that, we've seen the tech surge is well underway. You know, Red Hat is involved, Oracle is involved, and Oracle was involved in, you know, the process to begin with, and some of the state exchanges as well. But we've also seen a potential push from insurers to go out and sign up customers that are eligible for subsidies on their own. The government is outside of the website, because they're getting a little nervous about that. We don't know which ones were named. You would assume it would be big ones like Cigna and United Health and Aetna, but we don't know specifically who's trying to do this. The government's saying no, it looks like, citing, you know, security concerns. But it'll be interesting to see if they cave on that. Definitely the insurers are getting a little nervous because, you know, they want these exchanges to work, right? For them to get the risk pool they want, they need the exchanges to be up and running. So this isn't just, you know, bad news or egg on the face of the administration. It is a problem for the companies that are going to be intimately involved with this law.
All right, well, if you have more questions about Obamacare, you're going to want to check out our free report. It's called Everything You Need to Know About Obamacare. You can get a copy just by emailing us at obamacare@fool.com. Now we're going to move on, and we're going to talk about some bad news today. This week we've heard from Glaxo, Sanofi, and Pfizer.
Yep. 3
pieces of bad news, but how bad were they? So I'm going to have you rank them for me.
Okay.
All right, so we're going to start off with the first one is the bad news from Glaxo. It was disappointing results from the study for their heart drug. I'm going to need you to help me with how I pronounce this. Daraplatin?
Yeah, I always say daraplatin.
Daraplatin, that sounds good too. Turns out it didn't prevent heart attacks or strokes.
Yep.
This was a drug that Glaxo developed with Human Genome Sciences, which they recently bought.
They ended up buying them,
yeah, for $3 billion. So does this mean that this buy was a bust, or what?
Yeah, I mean, they got a couple other drugs, but not a whole lot. You know, the one approved drug wasn't really a great seller. Human Genome was really almost thrown a lifeline. Those investors ended up pretty happy, I think, about the buyout. This was considered one of the feathers in human genome's cap. So for this drug not to work, yeah, it does look like it wasn't a great purchase by Glaxo. And this was potentially, I wouldn't say this was going to be a blockbuster drug for GlaxoSmithKline, but certainly it had, 500, 600 million a year type peak sales potential. So obviously not good news.
Not good news. All right, the next piece of bad news we have is from Sanofi.
Yep.
Their multiple sclerosis drug, Lemtrada. Apparently the FDA has voiced concerns that the fatality risks associated with the drug might be too great to justify approval. Now, was this drug slated to be a blockbuster?
Yep, many times over.
Yeah.
Yeah, so this is really bad. When we finish all three, I'll rank them.
Right.
But this was surprising. It was also approved in Europe. So, the FDA is taking a much harder line. Now, there are potentially some side effect issues, autoimmune diseases, thyroid diseases. But, and the question is, does the clinical benefit of this drug outweigh those concerns? And it does, I guess, remain to be seen, but this is a drug that was expected to be a multi-billion-dollar blockbuster and potentially a real alternative to Biogen's Tecfidera for multiple sclerosis, which is a once-a-day oral pill. This is a once-a-year infusion. So if you don't want to take a pill every day, or you don't want to take injections a couple times a week, you can go once a year and get this treatment and then be done with it and live a normal life. It was definitely seen as a big cornerstone of what they were trying to do. It was part of the whole reason Sanofi bought Genzyme back in 2011 for about $20 billion.
Wow.
So a lot of expectations here, and to lose the U.S. market potentially would be just a huge blow.
All right, and our final piece of bad news is from Pfizer. This week we've learned that their organ transplant drug had disappointing results in a late-stage study of kidney transplants.
Mm-hmm.
What results were they looking for with this drug here? And I'm going to end up butchering it.
Rapamune.
Rapamune.
Yeah,
oh,
there you go.
was easy.
Yeah, you were right there.
Okay, all right.
So they were looking to basically beat their competing treatment, which is a TAC-based therapy. It was shown not to be statistically significantly better than that competing therapy, but this is an already approved product, unlike the other two drugs for the U.S. So, they're not necessarily jeopardizing sales here with a failure, and fortunately, no new safety issues came up either. The company, it did about $350 million in 2012 sales for Pfizer. I would expect that to be, it's gone down the last couple of years. This isn't probably going to help arrest that decline, but I wouldn't expect any overall trends to change dramatically one way or another because of this.
All right, so now it's time to rank them. We've got Glaxo's bad news, Sanofi's MS drug, Lemtrada. We've got Pfizer's bad news.
Yep.
All right, how do you rank them?
I would say Pfizer's is the least bad. It was more of a lack of good news than bad news, but definitely disappointing when you're going head-to-head with a competitor. Glaxo's is pretty bad. It was a reason to have purchased Human Genome Sciences. It was potentially worth several $100 million a year in sales. So that's a tough blow. But Lemtrada to me is by far the worst of the three. It's a big blow to Sanofi if they're blocked out of the U.S. market for safety issues.
All right, well, that is going to cover it for today. If you're looking for more investing analysis and ideas for investing in biotech, you're going to want to check out our special report. It's called 2 Game-Changing Biotechs. You can get a copy by sending an email to biotech@fool.com. For David Williamson, I'm Allison Southwick. Thanks for watching.